Hi everyone, welcome to the Advanced Mortgage Solutions podcast. I'm Joel Sadler and our mortgage expert today is Scott Miller, owner and founder of Advanced Mortgage Solutions. In today's episode, we're going to talk about health, life and mortgage balance. So what's amazing with Scott is that he's worked with thousands of people over the last 20 years, so he's got really key insights into not just around mortgage structuring, but around actual practical living your life, and I've seen extremes of people trying to pay off the mortgage in 10 years, right through to rolling it through to 30 years and all the pros and cons. So, Scott, what are some of the key tips that you could provide to our listeners around just balancing life with a mortgage?
Good question, and it's not one that's asked that often. Typically comes up more into focus a bit further down the track, a couple of years into having a mortgage or starting a family would be a big one, for example, maybe some health things that might come along. Or then pandemics was another one that we didn't see coming. So there were certain facilities open to clients around giving them some relief around a time that they may not have been getting the full income that they normally would have had. So really, look, it's slightly different for every person, obviously. A first-time buyer, you've got to be aware that affordability is going to be something that's top of mind for them. Usually they are emptying the cupboards out to sort of get the deposit funds together just to get on the property ladder. KiwiSaver and maybe family assistance is helping them with that, but it doesn't leave a lot in reserve. So, what we try to do in that instance is to make sure that things are going to run smoothly as we just tickle the repayments down and make them as low as possible for a while, just so that the customers get used to, being mortgage payers, rate payers, insurance payers. There might be the odd bit of maintenance that happens as well, particularly at the entry-level first-home buyer. So the health sort of life balance around that is just to ensure that there's a smooth transition from either leaving home and going into buying your own home or going from a flatting situation into buying your own home, and then making sure that that's ongoing. So there's not a lot of stress in regards to the change from what they've just done to what they're doing now. With someone that might have been, on a subsequent buy or something like that, they're a little bit more sort of clued up on what a mortgage is and what it means to own a home. So then we can bring in some sort of sexier products, for the lack of a better term, that allows them to be more aggressive if they want to, not if they don't want to. And there's a number of different products out there that we can sort of introduce at that stage that gives them that control over the balance. And you mentioned before, there's it's not absolutely black and white, but there tends to be two real camps. One that sort of bubbles along and we don't mind. We just want to sort of live in our house, do it up over time and pay it off. And if something comes our way, we might pay it down aggressively to, oh my God, I just want to be as aggressive as I possibly can, get it behind me and then live my life and have all of that cash coming back into something that I can use personally rather than paying off a mortgage. And there's two different answers to that, right? So the bubbling along is fine, but, do you really want to be there for 30 years? Most people, when you ask them like that, they say, no, I don't really want to be here for 30 years. And then so there's a mind change there. And equally, sometimes you have to lasso people in a bit and just say, hey, you don't want to go too hard on your mortgage because you might find that that's all you're concentrating on and you're forgetting to live life and go on holidays or do some of the things that we're actually put on this planet to do outside of paying the mortgage. So again, that's a conversation that happens depending on what the feedback is at the time of what I'm reading from the person. And usually, again, the more aggressive is a little bit more of a mature type of age group where the happy-go-lucky, let's just see where it lands, is probably that first-home younger buyer type of attitude. And they change, of course, as family come in and all sorts of other things come into life. But that's probably a bit of a helicopter view on what you've just asked.
Yeah. Basically, you read the room really, and based on your experience, you just identified a couple of different types of stages of life. Tell us a little bit about if there was a couple that have bought a home without kids, but then they've got a couple of kids on the way, 5 years down the track, and they're a bit worried around how that's going to play out. Can they always reach out to you to kind of discuss options there? And you mentioned, about tweaking payments sometimes to adjust things.
And a lot of the time
Yeah.
I'm contacted, 2 months out from the due date, and it's a bit
Yeah.
late at that stage to do much planning with
Yeah.
time remaining. Um,
Yeah.
and in that instance, then with such a short time frame, there's not a lot of tools in the box that the banks allow applicants to have. So the
Right.
longer they sort of heads up, I'm not saying, hey, in 5 years, 2 days and 6 months and 2 days, we're going to have a child. I mean, no one knows that.
Yeah.
Sort of saying, hey, look, we're thinking about starting a family. Those are the conversations I'd love to have, because it means, okay,
Yeah.
let's get a little bit aggressive on some of our repayments now so we can build up a buffer that you could draw back, at a time that you've only got one income, for example. And that can have, like a relief valve kind of application to it, where the one wage, usually the dad at this stage, although more mums, maybe the higher payer, go back and the dad becomes the full-time. But regardless, for a while, typically, the applicants go down to one income. And having that ability to draw back on a line of credit or maybe an offset account or something along those lines, at that time, it's just really comfortable for them to have that, knowing that they've got a little bit in reserve and to cover those tight
Yeah.
months. Because funnily enough, the bills still can't keep coming, and now you've got
Yeah.
a wee mouth to feed as well and entertain and do all of those sorts of things. So it is something
Yeah.
on a financial perspective that a good amount of lead-in time is sort of vital to plan with any kind of meaningful result, I suppose, is the way to put it.
Yeah. We've talked about strategic planning and planning ahead and having that mortgage life balance for different scenarios. Let's talk a little bit around, you mentioned earlier, insurance in our offline conversation. What if bad things in life do happen, right? So what if some partner, had a heart attack or the cancer, and hopefully they've had trauma insurance in place, but when those sort of things play out, what would be your advice, because then all of a sudden you're going down to one income as well. And the scenarios are very different. Obviously, sometimes people can get back on their feet within 3 to 6 months and they're back into it, Other times it's a 3-year process, or longer. What are your thoughts around that whole sort
Look,
of,
it's a great conversation. And where do I start? I mean,
yeah.
what I'd like to do is, in one of our future podcasts, is bring on our specialist here at Advanced Insurance Solutions just to talk to you around that. But, from a helicopter point of view, we're all 10 foot tall and bulletproof when we're young, and nothing's going to ever happen to us. And it's a real Kiwi mindset, I think. If you compare our risk type of insurances, so risk just means personal insurance, health, life, trauma, income protection, mortgage protection, those kind of insurances. Then in all of the OECD countries around the world, we are by far the least insured. It's just that Kiwi attitude, and it's really got to change, because just recently we've really had a couple of big wins here for clients that did the right thing, something happened to them, and we've got them the money that not only will more than likely see them through the treatment that they need, but have some extra to sort of, celebrate the victory of getting over whatever they've found themselves in. It is important, and it's very misunderstood. Kiwis would rather insure their motor car than themselves. And it's something that, slowly but surely we need to change. It's not going to change overnight, but it does offer those relief, like you say. It's all about money when things go wrong, and to have that money paid to you out in some kind of insurance claim, or have planned for that, as we just previously mentioned, around starting a family. It just makes all the difference. Yeah.
Yeah. Okay. Tell us a little bit around the budgeting advice, and like, how far into that do you go, or people that have been successful in that space with the planning, do they have a budget advisor, or have they seen a budget advisor or had some education? Like, what would you recommend people consider doing from a life planning budgeting point of view?
Not really. You're not even taught it in school. Budgeting and finance is just, you learn mathematics, but that's not budgeting or anything like that. Look, it has made it a little easier with the advents of things like KiwiSaver, and certainly the world becoming smaller through social networks and things. You do tend to find groups of friends at the same age are all of a sudden doing the same thing because their mates are doing it. They're looking to do it. So you do find that there's a lot of information out there. I don't have a license per se to give budgetary advice, like spend this much on that and this much on that. But from hey, how do we prepare ourselves to make an application for finance? I can talk to you or the clients until the cows come home. And it's typically the common sense things, don't go out and get yourself consumer debt that you don't absolutely need. And consumer debt means, hire purchases, buy now, pay later, credit cards, personal loans, all of those things are negatives to an application for finance because we have to show that as a cost. Equally, the good things is keep your eyes on the prize. If you want to get into your first home, be motivated to make sure you're doing the right things to do that. Saving for a deposit, keeping your KiwiSaver going, watching your spending. Come in when maybe the market's low like it is at the moment, so you're going to get a really good interest rate. So that kind of advice we take through people all the time. Not so much the direct budgeting advice. There are people out there that would do that. I'm not really plugged into them very much either. But specifically and towards home ownership, I can definitely give advice.
Yeah, that sounds awesome.
Yeah.
And then last point, really, and we'll wrap up, is around the credit cards. So I understand, say you've got a credit card with a $10,000 limit. That's a $10,000 liability on during your application. Does it have any impact at all whether I pay that back on time every month, or to zero every month or not? Or is it just the fact that I've got a credit card? And then what are your thoughts around credit cards? And if you sometimes said to people, look, go and pay your credit cards off and come back to me, or just give us a bit of a download on that in that space.
Lenders have to look at available finance that you can get hold of. Okay, so what I'm alluding to here is they're not really interested in the balance of a credit card. They're interested in the limit of the interest of the credit card. And so Joel comes to me for an application for finance and says, I've got a 10K limit, but I pay it off every day or all the time. And I'll say, yes, I understand that. But the bank will turn around and say, yes, but tomorrow you could have a minus $10,000 balance. So they have to assess on the $10,000 limit. So quite often we have to request a reduction in the limit. And in some instances, we actually have to request a closing of the credit card altogether to make the application service, or as far as a bank is considered, make the loan application affordable to the client. So really good point. One point that we have touched on earlier but didn't really go through is, through the times of unexpected developments, maybe worldwide, the global financial crisis of 2008 and 9 sort of springs to mind, or the COVID lockdown. There's certain levers banks can pull to make sure that for a while you may be on a mortgage holiday. It's important to know that it's not really a holiday. It's not that all of a sudden your repayments stop. They do stop, but what you're not paying actually gets added to your loan. And then you've got a higher balance at the end of your mortgage holiday period than you had at the start of the mortgage holiday period. So it's sort of a bad name for what it is, because it's not really a holiday. It's more like you don't have to pay it now, but we're going to add that to your loan in the background. So you will pay
the can down the road.
That's exactly it. Yeah. And a lot of people might get that shock at the end saying, well, hang on, my mortgage is now higher than it was before I was on a holiday. Look, be aware that when you're looking for some kind of release, and this is, that life balance that we're talking about here, and I've got to say a mortgage holiday is only under extreme financial hardship. So you can't go to the bank and say, I can't be bothered paying my mortgage this week. Can you just put me on a mortgage holiday for a week? Thanks very much. Hang up. It's not like that at all. But just be aware that understand the full ramifications of what they are letting you do with your mortgage to see that there's no adverse effect down the line. Yeah.
Right. Yeah. Yeah, I remember actually during the Christchurch Canterbury earthquakes, I was in Christchurch for that, and the banks actually went out to the market and he's actually emailed us and said, hey, look, do you need help? There's optional mortgage holiday. And I remember even speaking to someone about it, and they were very proactive, I think, in dealing with a massive situation, as you said, so, interesting.
Yeah.
Brilliant.
Yeah.
All right, Scott. Well, thanks so much for all the tips on that today. And to our listeners, reach out to Scott if you need help. Scott, what's the best way for people to get in touch with you?
Where's the website? It's got everything there. I don't mind being called directly, of course. But if you want to have a, sort of a look around with just to have an idea about things, there's loads of information for first-home buyers, subsequent buyers, buying a rental, what's a mortgage holiday, all those sorts of things are on the website. There's contact forms to get hold of us. There's multiple advisors here as well, so you can pick and choose who you'd want to interact with. But yeah, one-stop shop, advancedmortgagesolutions.co.nz.
Thanks, Scott. We'll see you on the next episode.
Thanks very much, Joel. Bye.